Okay, so I'm very worried about your video. I talked about some overall structural issues which I think Europe is going through. And very thankfully, a lot of you guys provided us a lot of inputs which were very helpful in understanding the first-hand situation. As a follow-up to the previous video, today I wanted to talk about some countries which I think are doing well economically, at least based on the general economic indicators. Before I begin, I just wanted to note a few caveats. Number one, I do understand that in the current world, a country with a truly thriving economy is extremely hard to find. However, despite where we are today, I try to pick some countries which are at least doing relatively well. Number two, for those of you who are actually from the countries which I'm about to mention, you may feel differently about the economic status of your country. I fully understand that there could be discrepancy between the data and the real life people are living, so if you have any comments you'd like to make regarding this point, please leave your thoughts in the comment section down below. Number three, I picked 6 countries which I think are actually doing well already, and 4 countries which I think are not doing as well as the other 6, but which I believe can do better if they can improve on certain areas. Number 4, I focused on some important economic metrics to select the countries. The following are the metrics which I looked at. Just to let you know in advance, a country ticking the box for all the indicators is near impossible, so I try to pick the countries which are doing well for most of the criteria. Okay, so the metrics which I used are: number 1, has decent GDP growth. Number 2, has low unemployment but driven by private sectors. Number 3, has clear industries which are acting as growth drivers. And number 4, has healthy government debt to GDP. Number 5, has sustainable tax rate which can generally continue to motivate the workforce. Number 6, has a decent birth rate. Number 7, has a moderate inflation rate. Number 8, has future innovation potential. And number 9, does not depend on QE or super low interest rate to sustain the growth. Okay, now, please be reminded again that there are no countries that satisfy all those criteria, so please bear that in mind. Also, please be reminded again that how you actually feel living in these countries may be different from what the data suggests. So please leave your thoughts in the comment section down below if you have any thoughts or comments. Okay, let's get to it. Okay, starting off with the 6 countries which I picked as doing well economically, the first country which I picked is Switzerland. These are the reasons why I picked Switzerland. Number 1, Switzerland's GDP growth is still at a sustainable level of around 3%, which is quite high for a developed country. Also, compared to its historical average, its GDP level is still quite stable. Number 2, unemployment rate is very low at around 2 to 2.5%, but also 85 to 90% of the employment is focused on private sectors, which suggests a healthy labor market structure. Number 3, as a country with small population, it still has a globally leading companies like Nestle, Roche, and Novartis, which are generating over $200 billion in revenues. Number 4, government debt to GDP is quite low to moderate at around 40% level. Switzerland runs a prudent fiscal policies with a strong currency which is acting as a quasi-reserve currency of the world. Number 5, inflation is moderate at around 2 to 3% level. Switzerland's level of inflation is supported by the strength of their franc currency. Number 6, innovation is still underway. Switzerland is spending around 3% of its GDP on R&D in pharma and medtech sector, which suggests that future economic prospect is still valid. Number 7, there's no excessive QE. Switzerland's economy is self-sustained without any dependency on excessive artificial monetary policies. Okay, now the second country which I picked is Denmark. These are the reasons why I picked Denmark. Number 1, Denmark's nominal GDP growth is strong with around 4% growth. Now, considering Denmark is also a developed country located in Europe, this is a very high growth number. Number 2, unemployment is quite low at around 3 to 4%. However, one thing I'll note here is that Denmark does have a bit higher employment in the public sector, consisting of around 25 to 30% of total employment. This portion could improve by being lowered, as it also seems to be leading to a super high tax rate of around 55 to 60%. One question I had for people in Denmark is whether people are okay with the high tax rate. Now, I do understand Denmark has a very high quality public services, but just wanted to check whether this is widely accepted. Number 3, there are global innovative companies such as Novo Nordisk, Moller Maersk, and Vestas. I just wanted to note that having global and innovative companies within pharmaceuticals and energy sector is always a super advantage to a country. Some of those industries may be cyclical and dependent on geopolitical tensions, but having strong industries in those sectors always gives a country fundamental strength to self-sustain the future growth. Number 4, government debt to GDP is very low at around 30%. Number 5, birth rate is relatively okay at around 1.7. Number 6, innovation is still pursued with around 3% of GDP spent on R&D, especially in biotech, green energy, and logistics. Number 7, just like Switzerland, the economy is not driven by QE, but more driven by exports and renewable investments. Okay, now the third country which I picked is Poland. These are the reasons why I picked Poland. Number 1, Poland's nominal GDP is growing at 7%. Now, even if we change the metric to a real GDP, it's still at around 3%, which is super high. Now, the reason Poland's economy is doing so well is because of structural transformations which the country went through for almost a decade. Poland received a mass infrastructure fund from the EU, which were used to build roads, logistics hubs, and renewable projects, which provided long-term fundamental basis to increase economic efficiencies. The country also has a large number of young and skilled workforce who are super driven and productive. This led to global companies like LG, Intel, Mercedes, and Bosch building major production hubs in Poland. This also led to higher spending power of the middle class in Poland, which led to higher consumer confidence in the country, leading to around 60% of Poland's GDP coming from private consumption. This is the highest in Europe and also represents how healthy Poland's economy is. Number 2, unemployment is very low at around 3 to 3.5%, and 85 to 90% is focused on private sectors. Number 3, government debt to GDP is moderate at around 50%. Number 4, top tax rate is relatively low at around 32 to 36%. Now, Poland's economy is still sustainable even with a relatively low tax rate given the high and healthy growth the country is recording. Number 5, innovation is also underway. There are rising IT services and startups in Warsaw and Krakow clusters focusing on software outsourcing. Now, 2 things I was wondering about Poland is that Poland's birth rate is relatively low at around 1.2 for such a strong economy. And also, inflation recently spiked due to energy and food costs. Now, while the economy is strong, relatively lower birth rate and high inflation can lead to vulnerable outcomes, which needs to be fixed quickly. I just wanted to get some of your thoughts on why those issues are recently happening in Poland. Okay, now, the 4th country which I picked is India. These are the reasons why I picked India. Number 1, India's nominal GDP is growing at around 10%. In real GDP terms, it's at around 6 to 7%. Now, while India is still a developing nation, I just wanted to note that GDP growth of this level is still extremely high, representing a vibrant economy. I also wanted to note that while working at my current job, I have a very strong feeling that India's capital market is becoming super lucrative. There are so many multinational companies which want to go into the India market, aiming for a potential IPO in India. This basically means that global companies are viewing India not only as a manufacturing or outsourcing hub, but a place where they can fundamentally base their business to attract capital. This is a huge change for India. Number 2, obviously, there are a lot of global renowned companies like Reliance Industries, TCS, Infosys, Tata, and Mahindra. These companies are across all major industries including energy, IT, banking, auto, and manufacturing, which shows a diversified and balanced economy. Number 3, tax rates are still relatively low at around 30%. Number 4, birth rate is still quite stable and relatively higher at around 2. Number 5, R&D and innovation is massive. Tech startup ecosystem is booming with multiple unicorn companies, and government support towards manufacturing is driving the investment in the long term. Now, I do believe that these investments will act as major drivers of the economy. Now, on India, I do understand that the society is a very delicate one, regardless of the economy, which still stems from its long-lasting cultural foundation. I just wanted to ask any of my Indian viewers on how they actually feel about living in India. I mean, it is quite obvious that the economy is growing very fast, but I think there could be quite a bit of disconnect between the economy and people's actual day-to-day lives. Okay, now the fifth country which I picked is Vietnam. These are the reasons why I picked Vietnam. Number one, nominal GDP growth is still very high at around 9%. Obviously, as many of you may know, Vietnam's export-driven economy is supporting the overall growth. Number two, unemployment rate is very low at 2 to 3%. Number three, regional conglomerates like Vingroup is now going into innovative industries like electric vehicles. By the way, I visited Vin Resort a couple of times and they're so nice. Number four, government debt to GDP is moderate at around 40 to 45%. Number five, tax rates are relatively low at 35%. Number six, birth rate is still quite stable and relatively higher at around 2. Number seven, middle class is expanding with rising wages. Number eight, inflation is still controlled at around 3 to 4% despite a fast-growing economy. Number nine, innovation is underway with emerging tech ecosystems in Hanoi and Ho Chi Minh. FDI-driven manufacturing innovations are driving the innovations. Number 10, the economy is not a QE-dependent economy and export-driven. Now, going through a lot of the economies which are doing well, Vietnam was probably the only country which checked all the boxes for me. At least on paper, I think Vietnamese economy is doing fantastic. Okay, now, the sixth country which I picked is Singapore. These are the reasons why I picked Singapore. Number one, nominal GDP growth is at around 5%, which is quite high for a developed nation. Number two, unemployment rate is very low at around 2 to 3%, and employment is private sector driven. Number three, financial sector is still booming with banks like DBS, OCBC, and UOB having large footprints across the entire Southeast Asia region. Number four, as a lot of you may know, top tax rate is very low at around sub 20%. Number five, inflation is quite controlled at around 2 to 3% level. Number six, R&D spending is quite high per capita, which are mostly government-driven. They're also expanding into diverse industries like AI, biotech, and fintech. Now, on Singapore, while I think the economy is doing well on paper, just like many other countries, I did hear that the country is going through some housing bubble issues. Also, birth rate seems very low at around 1.1, which I think may be a problem in the long run. If any of you guys have more background on these fronts, please let me know. Okay, so those were the 6 countries I picked as the ones which the economy is doing well, at least on paper. Please be reminded that while the economy may be doing well, your day-to-day life may have some disconnects, which I'm very curious to learn about. So please leave your thoughts in the comment section down below. Okay, so now I wanted to mention a few countries which I think has the potential but just needs to fix some imminent problems to actually do better economically. So there are 4 countries which I wanted to talk about today. The first country I wanted to talk about is Canada. Okay, so I think Canada has a good basis to continue to grow. It has a nominal GDP growth of around 4%, real GDP growth of around 1.6%. Unemployment is somewhat high, but okay at around 5 to 6%. And employment is private sector dominant. The country has solid commodity exports and also has some globally leading companies like RBC, Shopify, Suncor, Canadian Natural, and Magna. Now, when I look at the data, some of the issues I see are the following. Number 1, housing affordability is a huge issue. Now, I do understand that housing is an issue in a lot of countries, but I actually think Canada's housing market is in another galaxy, especially in Toronto and Vancouver. Now, I do understand that housing market has been cooling in recent months, which is a good news, but still, I think this housing issue is dragging down the economy so much that I really believe the government needs to go full force in stabilizing this issue. Number 2, I may be missing some things, but I do think the Canadian government needs to drive more investments into innovative industries like advanced manufacturing, clean tech, and AI ecosystems. I do think Canada has the human labor and resources, and with the right government push, this can create a lot of synergies. Right now, I think Canada's industry is too skewed towards resources and finance despite the scale of the economy. Okay, now, the second country I wanted to talk about is Australia. Okay, similar to Canada, I think Australia also has a good ground to grow the economy. It has a nominal GDP growth of around 4%, unemployment is somewhat low at around 3.5 to 4%, and employment is skewed towards private sectors. Debt to GDP is moderate at around 60%, and birth rate is okay at around 1.6, given there's quite a lot of immigration as well. Now, when I look at the data, some of the issues I see are the following. Number one, Australia is too heavily dependent on mining and commodities. Now, these two industries consist of around 65 to 70% of total exports in Australia. Now, having iron ore, coal, and natural gas as major industries can be very lucrative, but the problem is these industries are highly cyclical. Also, these industries are not labor-intensive industries. Mining industry in Australia only employs about 2% of Australia's total workforce, given these industries are capital-intensive and not labor-intensive. Also, Australia's strong tie with China is also a risk, given it could be impacted by any form of trade sanctions and geopolitical events. I really do believe, number one, Australia needs to diversify their industries, and number two, they need to actively diversify their trading partners so that they can be more free from any one-off sanction events. Number two, now, I don't know how I can say this better, but I think Australia's government and policy structures are dragging down the economy. I mean, Australia had 7 different prime ministers in 15 years, and there are so many fights between the parties that lead to policy reversals, especially in energy, climate, and housing. If one policy is introduced and reversed after a year, no one can do business with the same mindset in this country. These inconsistencies also lead to less investors wanting to invest in the country. I mean, as I say all the time, one thing which the investors hate is uncertainties, and if political system is always uncertain, it'll drive investors' money away from Australia rather than attracting it. Now, I don't know if this is an easy fix, but I really do think something needs to be done on this front. Okay, now, the third country I wanted to talk about is Netherlands. So the country is recording a healthy nominal GDP growth of around 4%, has a low unemployment rate of around 3.5%, with focus on the private sectors, and debt to GDP of around 50%, which is moderate, and has a leading global companies like ASML, Shell, Unilever, and Heineken. I love Heineken. Now, while I think Netherlands is economically doing well, I see some issues to be fixed. Number one, similar to Canada, I think housing is an issue. Right now, Netherlands has a shortage of homes which is estimated at around 400,000, and the real issue is that construction is not keeping pace with the demand from a growing population. Now, this is a huge problem for the economy because this could lead to a significant portion of people's income being sucked into housing alone, which will create a vicious cycle on consumer spending. Now, a healthy economy must have vibrant consumer spending supporting the economy, but with the housing crisis, this becomes a fundamental issue. Number two, I think Netherlands' politics is way too fragmented. Based on what I read, it seems like Netherlands has over 15 parties which are holding seats at a 150-member parliament, and the largest party rarely wins more than 20% of the total vote. Now, I do understand this happened after the political shakeup with Mark Rutte resigning after 12 years in power, but the deep divisions within the parties is leading the country nowhere. I mean, obviously, this can cause a lot of problems, including policy deadlocks, fiscal uncertainties, declining institutional trust, and further, this may even impact the EU on forming the policies of Europe as a whole, given Netherlands is one of the larger economies in the region. Now, as I say about politics all the time, there are no easy fixes, but I do believe there needs to be something done about the situation. Okay, now, the fourth country I wanted to talk about is Norway. So, Norway is also showing a healthy nominal GDP growth of around 6%, which is very high, and low unemployment rate of 3%, and has some globally leading companies like Equinor and Norsk Hydro. Now, while I think Norway is economically doing well, these are some issues I found. Number one, there is too much dependence on oil. Now, while this may not be a bad thing, similar to Australia, dependence on a resource industry can be dangerous given the cyclical nature of the industry. I think some further diversification into biotech and green energy can boost the economy even further. Number two, I think Norway's demographic structure is slowly draining the economic power. Now, I do understand that Norway has an okay birth rate, but the post-war boomer population is too high that there's too much taxes going into pensions and welfare spending, which is one of the highest among OECD countries. Also, labor shortages in healthcare, construction, and tech can also become vulnerable aspects of the economy. I do think Norway has the power to further grow the economy, but I believe the economy needs to diversify the industries quickly, which can leverage highly efficient workforces, so that the country can generate more value with smaller labor forces. Okay, so today I covered 6 countries which I think are doing well economically, and 4 countries which I think has the potential but can improve in some areas. Now, as I said multiple times, I'm only giving you my observations based on data, so please bear in mind that some things which I said may not be totally accurate, and I may not be reflecting the reality to the fullest extent. So for those of you who may have additional inputs on the things I said, please leave your thoughts in the comment section down below. I hope you enjoyed the video, and I'll be back with more videos very soon.